Where does China stand in the larger scheme of things? Because we've been talking about hard landing in China for a while. We've been talking about the bubble risk in China for a while. But come 2012, post the market fall in 2011, there's suddenly been a change in the rating or the weightage that funds have in China. Why do you think that's happening? And how realistic is it?
Because I think that especially Western investors got carried away with their own analysis. We've had a property bubble in the West, so there must be one in China. We've had a hard landing in the West, so there must be one in China. And the reality is there's not really a property bubble. I mean, there's some excesses here and there, but nothing particularly serious. And there definitely wasn't a hard landing. There was a bump, and they've taken off again. Yeah. So I think that we used our own frame of reference and assumed that everybody else had to follow it. It's not happening.
Would you accept the opinion that China is manipulating its currency to help its trade?
I think it is manipulating its currency in order to regulate the atmosphere for capital in its economy so that it suits the stage of the life cycle that China has reached in terms of its development. And I think that's a not unreasonable thing for China to be doing. Most foreign investors have decided to take something of a rain check on India over the last year because of the problems that appear to be emerging within the political system in India. The issue over the retailing story, but generally the fact is that people feel as though the reform process has slowed, that they don't really know where things are going. Some of the so-called bad habits of India seem to be reappearing, and people are saying, well, look, there are other opportunities elsewhere in the world. I don't need to take any risk at the moment. Obviously things like the currency falling the way that it did has upset especially equity investors. So I think people are now looking at India slightly more carefully, slightly more warily than they were a year ago. I think that once we get some sense of either that there's going to be a new political determination to carry forward the reform process, or there's a change in the power structure in India which might lead to the same, then the re-engagement of foreign investors will happen. But I think people are taking something of a wait-and-see position at the moment.
So you don't think in this rally we've seen serious long-term money come back into the market?
Not serious long-term money. I think we've seen slightly more speculative long-term money come back into the market.
Okay. When you look at India, there is a sense that in the second half of this year there would be a change in perception.
I suspect it's a sort of game of chicken that's going to be played out this year, because some people are going to be brave enough to jump the gun, anticipating that things will get better in the second half of the year, and some will say, but India is always raising expectations and then disappointing us. So we have to play those two things off against each other. But my feeling is that it to some extent will be swept along as part and parcel of the broader picture that I painted at the beginning of this interview, and that is that in the second half of this year I see a risk on trade generally back into emerging markets as a result of China having essentially taken its foot off the brake and touched the accelerator in the first quarter.
We just had a CRR cut in India. Positive measure?
Very much a positive measure. I think it has reassured people that even if the more political side of the equation still can't seem to make up their mind, that the technocrats in the central bank still know what they're doing.
What's the view on sectors in India?
Well, it's an interesting thing that in the developed world very few people are touching the banks at the moment. One of the ironies, of course, is that banks in emerging markets are sometimes some of the best places to be, because the banks are boring, and boring is great. So I think that probably the financial sector is looking particularly attractive at the moment. I would probably still be a little bit in favour of those companies that have some export earnings, because I don't think the rupee is going to rebound as much as it otherwise have done. That would be great for their earnings, and we've seen a couple of examples of that already. By the opposite token, I would probably be a little wary of those sectors that are dependent on imports. I think the oil sector is always a difficult sector in India.
Would you not look at private players there?
I might, but it would probably be special situations like Ken.
If you were to look at India from a valuation perspective, 12 to 13 times FY13 earnings, what would be your view?
Look, I think that that's probably, with India's growth rate, not in any way excessive. And one of the things that I've been reminding everyone is that India's growth rate, as China's growth rate, is a lot higher than 7% at the moment. It's 7% plus what might be the rate of appreciation of the rupee, and we could probably throw in a couple of, maybe 3 this year, plus the inflation rate. So India in nominal US dollars is going to be growing at 15% plus this year. China's probably going to be growing at 17% plus this year. When you think of growth in those terms, and you should think of growth in those terms, suddenly your growth rate is actually higher than your PE. And for me, that's one of those, in some respects, it's not a particularly usual way of thinking about valuation, but it makes me sit up and take notice when the GDP growth rate is higher than the PE. I saw a great piece of research yesterday whether India is a typical Asian market, partly because it runs this rather large current account deficit, and maybe we need to have a slightly different strategy for India that runs completely separately from our traditional strategies that we tend to adapt or adopt towards Southeast Asia and China.
Well, Michael, thanks very much for taking out the time. Well, with that, we come to the end of this edition of Global Mantra. Thanks very much for watching the show. Next time, we'll get you another special guest right here from the City of London.